For over 3 years, the global community has been navigating the complex and often turbulent waters of U.S. sanctions. The precedent set with Russia, where assets were confiscated and the dollar-based financial system was weaponized, sent a clear message. The U.S. is willing to wield significant economic power to achieve its geopolitical objectives. Now, a new and potentially more far-reaching form of economic leverage is being considered: the weaponization of the U.S. consumer market through secondary tariffs. The U.S. has threatened to impose these secondary tariffs, a novel and aggressive trade weapon designed to compel nations to align with U.S. policy or face severe economic penalties. This approach, while potentially yielding short-term policy gains, carries the significant risk of undermining long-term trade relationships and reinforcing perceptions of U.S. overreach, potentially fracturing established international trade norms. Specifically, the U.S. is targeting Venezuela with these secondary tariffs. Any country that dares to purchase oil or gas from Venezuela faces a crippling 25% tariff on all goods traded with the U.S. This measure, scheduled to take effect on April 2nd, aims to effectively isolate Venezuela economically, cutting off its primary source of revenue and exerting maximum pressure on its current regime. Venezuela's economy has been in a state of severe and prolonged decline for several years. Following years of economic mismanagement and political instability, the economy contracted by a record 30% in 2020 alone. While the previous administration signaled a willingness to ease sanctions in exchange for democratic reforms, these reforms did not materialize, leaving Venezuela under stringent U.S. sanctions. The primary target of these sanctions is PDVSA, Venezuela's national oil company, which is barred from conducting business with U.S. companies. The proposed secondary tariffs on Venezuelan oil exports threaten to further devastate the Venezuelan economy, which relies on oil for a staggering 80% of its exports and 17% of its GDP. This economic pressure is designed to force regime change. The U.S. wields considerable economic leverage over Venezuela. Despite existing sanctions, U.S. oil giant Chevron continues to operate in Venezuela through joint ventures, exporting Venezuelan oil to global markets. This revenue, denominated in U.S. dollars, remains within Venezuela but beyond the government's direct control. The U.S. could potentially force Chevron to cease operations, or the secondary tariffs could eliminate demand for Venezuelan oil altogether. These secondary tariffs also impact Venezuela's oil customers, including major economies like China, India, and Spain. China, which purchases over 40% of Venezuela's oil exports, faces significant disruption. Many Chinese refineries rely on discounted Venezuelan oil, which accounts for up to 20% of their feedstock. Smaller refineries could face closure, potentially destabilizing the Chinese industrial sector. The U.S. is also targeting Iran's oil exports, with the stated aim of reducing them by 90%. China is a major buyer of Iranian oil, accounting for 90% of sales. Combined with Venezuelan oil imports, China's total oil purchases from these two countries exceed 1.6 million barrels per day. This effectively places significant pressure on China's industrial economy, potentially igniting further economic tensions. The uniqueness of these secondary tariffs lies in their direct enforceability. Unlike financial sanctions, which can be circumvented through alternative payment systems, these tariffs can be directly applied to imports at U.S. customs, making them a powerful and difficult-to-avoid tool. The imposition of a 25% tariff on all goods from countries that purchase Venezuelan oil, in addition to existing tariffs, creates a substantial economic burden. This is particularly concerning for China, which already faces a 20% tariff on certain goods, potentially escalating trade tensions to unprecedented levels. Beyond China, other countries such as India and Spain, which import significant volumes of Venezuelan oil, are also impacted. These nations are likely to comply with U.S. demands to avoid the additional 25% tariff, potentially altering their trade relationships. However, the weaponization of the U.S. consumer market carries significant long-term risks. While it may achieve short-term policy objectives, it could ultimately lead to economic backlash. As countries become increasingly wary of U.S. economic leverage, they may seek alternative trade partners and financial systems, potentially undermining the dollar's global dominance. The U.S. has a history of imposing tariffs, Data from 2022 shows that the U.S. has imposed nearly 5,000 tariffs, significantly more than any other nation. This trend could lead to further economic isolation and increased global trade outside of U.S. markets, potentially diminishing U.S. economic influence. The impact of these tariffs will be felt within the U.S. as well. Increased import costs will lead to higher prices for American consumers. The U.S. relies heavily on imports from countries like Mexico and Canada, with some states importing over 70% of their goods from these nations. There is also speculation that these tariffs serve a dual purpose to boost U.S. oil production. By reducing oil exports from Venezuela and Iran, the U.S. can increase its own oil exports and maintain higher prices, benefiting U.S. oil companies. The enforceability of these secondary tariffs makes them a powerful and difficult-to-circumvent tool. The question remains, how will the global community respond to this unprecedented use of economic power? Will it lead to increased compliance or a push for alternative trade and financial systems? The implications of these secondary tariffs are profound, potentially reshaping global trade and economic relationships. We've explored the complexities of this situation, but the story is far from over. What are your thoughts on this unprecedented use of economic power? Share your insights in the comments below. If you found this analysis informative, please hit the like button, share our video, and subscribe to stay updated on the evolving global economic landscape. Your support helps us bring you in-depth analysis on these critical issues. Thank you for watching.